Okay. Good evening, everyone. I'm Sheshadri. I'll be taking the financial management December 2020 problems with the solutions. It's a 60 marks financial management and 40 marks is strategic management. I'll be solving the entire question paper of December 2020 FM. So please feel to ask any questions, or in the chat box you can raise any questions if you have any doubts. Okay. So shall we proceed now? Okay. Just I'll share the screen of first question paper. First you will observe what is the question, then we can go to the solution. Okay. Just I'll be sharing the December 2020 question paper for you. Okay. So first question, it's a very simple question. Find the correct statement regarding profit maximization. What is profit maximization? Correct. It is the earnings after tax, net profit after tax. So there are some 4 objectives have been given. If you take objectives of financial management, there are 2 objectives. What are the 2 objectives? One is profit maximization. Second is shareholder wealth maximization. Correct. But what is the question given? They are asking you the statement, apt statement on profit maximization. What are all the multiple choice given in this question? First option, profit maximization considers the firm's risk level. I'll repeat. First option, profit maximization considers the firm's risk level. Second option, profit maximization will not lead to increasing short-term profit at the expense of lowering expected future profit. Third option, profit maximization does consider the impact on individual shareholders' earnings per share. Fourth option, profit maximization concern more with maximizing net income. If you take shareholder wealth maximization, there is a concept called economic value added, which you have learned in financial management. Correct? So it's more on the shareholders' wealth. But profit maximization focus on the maximizing company's net profit or net income. So if you take wealth, it pertains to shareholders maximization. Stock price, shareholder price, how the market price of shareholders get increased. That pertains to shareholders wealth maximization. But our question is very clear, simple question. What is the correct statement on profit maximization? So simple answer, option D is the correct answer. What is option D? Profit maximization is concerned with maximizing net income. It does not focus on stock price, market price, shareholders price. It focuses on only maximizing company's net income. Clear? So for the first question, option is D. Please make a note for the first question, option is D. So I will just revise. I will also put the questions with the answers. I will mark you. So the first question. So what is the first question? If you take the first question, it's very simple. Correct? Profit maximization. The option is D. So for the first question, option will be D will be the option. What I will do now, just I will show up the screen for you so that you can see the Excel now. If you see my Excel, this is the answer. Okay. For the first question, answer is D. For the problems, I will work out in Excel how to proceed. Okay. So are you all clear? First question, very simple question. Ma. Please make a note. For the first question is answer is multiple choice answer is D. Very simple question. Profit maximization. Focus on net income. Focus on profit rather than maximization of shareholders' wealth. It does not focus on stock price, shareholder price, market price. It focuses on only income. Question itself, profit maximization. Okay. Hope everyone clear. Okay. Hope everyone clear. Next is second question. And please make a note, ma. First question, option answer is D. Please make a note so that we can move to second question. Okay. Next is second question. I'm sharing the screen. Okay. The question, please copy down. Already question is available. I'll give you time. Please copy the first question, ma. Please copy the first question. Then we'll proceed second question. Option is D. Please copy the first question. If you want to make a screenshot, also you can make a screenshot of the question. Answer is D. Okay. Hope everyone taken the screenshot, or those who are copying. Hope please copy ma. I'll wait for a minute. It's a very simple paper ma. Easily you can score 60 out of 60. Minimum you can score 50 plus out of 60. But if you do well, if you concentrate much, definitely you can score 55. Definitely you can. Otherwise, those who put full hard work and you follow everything, you are good in concepts. Very easy paper ma. They will test only the concepts, not complicated things. Should be good in the concepts. First chapter, focus on profit. What is the objectives of FM? Financial management. Profit maximization, wealth maximization. Based on that, definitely one question will come. Okay. Shall we proceed to second question? Okay. So the second question. Hope everybody copied first question. Okay. Second question, at least you can write only the answers also, no problem. First question, answer is D. You can write only the answers also, no problem. Okay. From which of the following economic value added will not increase? What is the meaning of economic value added? First of all, you should know the meaning. Then only you can go for a multiple choice question. Correct? What is the meaning of economic value added? I told you, shareholders. For example, today a shareholder put some capital in the company. Correct? He has invested 50K. Okay, maybe 50,000 or 50 lakhs. Take any example. Correct? He invested some capital in the company. Correct? When he will be happy, he has to recover at least in the form of dividend, in the form of profit. He should recover whatever he has invested. Otherwise, what is the use? Correct? What he will think if the business goes under the loss? If it is profit, is happy. Correct? If it is under loss, what he will think? Rather than investing in the business, I should have invested in somewhere in FD or put some investment in some funds. I should fetch some interest. Rather than invested in the company, I got a loss. So what is important? After profit, after tax, even after tax also, there is a concept called economic value added. What is the he invested in the capital? For example, this 50K he invested in fund, he is getting 18% interest per annum. Example, that 50 lakhs or 50,000, 18% should be reduced from your profit after tax. The resultant profit is called economic value added. Clear, everybody? What is the ultimate shareholders gain? What will be his opinion? He should ensure that he maximize his wealth. That is called economic value added. Rather than profit, after profit also, whatever he has invested, he has sacrificed. Correct? He has invested capital in the company. He expected he will get good earnings. But what happened? If it is negative, then he will think why he has invested in the company. If he invested in somewhere, correct, you should have fetched some interest. That interest is a sacrifice. So from the profit, you have to reduce interest. The balance is the resultant profit for shareholders. That is called economic value added. Okay, we'll go to question 9. From which of the following economic value added will not increase? Again, I'm repeating the question. From which of the following economic value added will not increase? First option, operating profits grow without employing additional capital. What is the question? Option A, operating profits grow without employing additional capital. Second option, unproductive capital is liquidated. It gone in cash. Cash flow generated by a business is equal to the cost of capital. Fourth option, additional capital is invested in the projects that gives high returns rather than cost of procuring new capital. Very simple, everybody, students. If you take the third option, it match. I told you, if he has invested somewhere, correct, he should have fetched some interest, some cash flow. He's sacrificing. Correct. What is the cash flow generated by the business? Correct. It's equal to the cost of capital. At least he should recover what is the cost he invested as a capital. That is called here cash flow generated by the business is equal to the cost of capital. For the second question, option is C. For second question, option is C. Please copy the question. I'll give you time. For the second question, option is C. Please make a note, mark. Okay. Please copy the question with answer. You can copy the question and give the correct answer. It's more than enough. Rather than copying the all multiple choice, you can choose the correct answer also. You have to give the state. Don't mark A, B, C and all. Type In the exam anyway, it's a MCQ pattern. But for the learning, you will remember when you write. Rather than A, B, and C, if you write the exact answer, you will remember. Yeah, please copy, ma. All copied? Oh. For second question, option is C. Okay. Just for your purpose, I am taking an Excel for you also to give the answers in Excel. For second question, option is C. Just take down and you have to mark that question and you have to give the answer. Second is C. Now what I will do, I will share that PDF to make you copy that question with the exact answer. Yeah. Now you can take the question with answer mark. For first and those who are not copied, first question, please copy. And second question also, please copy. First option, answer is D. Second option, answer is C. Please copy mark. Okay, hope all have taken the correct answer. Next is third question. Dash is the most appropriate goal of the firm. I told you, what is the ultimate aim? Shareholder should be happy. Correct? Because he has invested the capital. He should be happy. First option, shareholder wealth maximization. Second option, profit maximization. Third option, stakeholder maximization. Fourth option, earnings per share maximization. Very simple, Kanna. What will be your answer? I told you shareholder should be happy. Correct? His wealth is important because he invested a lot of money in the company. So ultimate game, which is appropriate goal, shareholder wealth maximization. Option is A. For the third question, answer is A. Please copy, ma. You can write. What is the answer also? You can write. Shareholder wealth maximization is appropriate goal of the firm. That's all. Don't want to write all the multiple choice questions. You can write dash means what your answer is option A. Shareholder wealth maximization is the most appropriate goal of the firm. That's all. Okay. Any doubts? Any doubts, let me know, ma. Okay. We'll go to next question. Okay. We have covered 3 questions, ma. Next is 4th question. Earnings per share can be calculated as. Very simple. What is earnings per share? Net profit after tax less preference dividend divided by number of equity shares. That is a formula. Correct? What is the formula, Kanna? I'll show you in Excel for you. Earnings per share I will calculate so that you will have some understanding also how the profit is calculated. How you will calculate earnings per share, Kanna? Net profit after tax less preference dividend divided by number of equity shares. This is a formula, ma. Correct? So in the option, please copy this formula. Net profit after tax less preference dividend divided by number of equity shares. Please copy this formula for earnings per share. Please copy, ma. Please copy this formula. Hope all copied. Net profit after tax less preference dividend divided by number of equity shares. Simple formula. Okay. Now we'll go to the PDF. What is the question given? Hope all copied. Okay. Now we'll go to the MCQs. What it's given? What it's given? Earnings per share calculated as. There are 4 options, ma. Which options you should take? Very simple. Second option. Second option gives perfect answer. Use the income statement to determine earnings after tax. Divide by number of common shares outstanding. If there is no preference shares, so they assume that there is no preference shares. Correct? So there is no preference shares, there is no preference dividend. So automatically what will happen? Profit after tax divided by number of equity shares. That's all. Correct? Very simple. What will be your answer? What will be your answer? Option B. Option B. Please copy, ma. Please copy the question and take option B. Because they are saying no preference shares. Leave it. That's all. Okay. So we have covered 4 questions. First question, second question, third question, fourth question. Fourth is B. Please copy the question. Only the relevant answer you write. No need to copy this A, B, C, D and all. Write the relevant answer. That's all. It's easy for you to remember. Okay. Okay. Shall we proceed? Next question, ma. I'll share you the Excel now. So what is the option for the answer? If you have the question paper, it's well and good. You can just tick the answers only. Fourth is option B. First is D, second is C, third is A, and fourth is B. We have got 4 questions. Kanna. Okay. Next, we'll go to next question. What is the next question? Fifth question. Very important question. There are 3 types of decision in financial management. What are all those decisions? One is financial decision, other is investment decision, other is dividend decision. What is the question given? Investment decision in financial management. What is investment decision? You put some projects. You have invested some assets, long-term capital assets. It's called investment decision. That is one chapter, capital budgeting. Correct? What you will decide? Whether I need to go for that project. Correct? Whether I need to replace existing machinery or I need to buy a new machinery. It's like a make or buy decision. Repair existing machinery or buy a new machinery. It's like a long-term decision also will take place. Correct? Investment in long-term assets or long-term project. That is called investment decision. What is the question given? Investment decision in financial management does not include. What is the option given? First option, dividend payout decision. Correct? Second option, capital budgeting decision. Third option, working capital decision. Fourth option, reallocation of capital. So what will come? Very simple. Investment decision means what I told, capital budgeting. Without working capital, you cannot have capital budgeting. Without allocation of capital or funds, you can have investment decision. You cannot have. Then what is the answer? Dividend payout decision is the exact answer for this question. So investment decision does not include. What is the answer, Kanna? Investment option does not include. What is the answer? Dividend payout ratio decision. Option A. Please note down for the 5th question. Answer is A. Very simple. Please copy ma. Investment decision does not include what? Dividend payout decision. That's all. Simple answer. Option A. Please copy the question with the relevant answer enough. Okay. Next question. Simple question. Sixth question. The main function of financial management. What is the function of financial manager? Ma? Preparation of cash flow. We should discuss with the senior management how to allocate funds. Capital budgeting decision. He has to prepare cash flow. What is the net present value? Whether in long term, what is my current ratio? How is the company will able to pay its fixed commitments of employees, fixed salaries, correct? There'll be a fixed operating expense will be there, rental expenses, electricity expenses, lot of expenses. He has to focus. Then he has to focus on asset management, correct? Capital budgeting, capital structure, how to allocate funds, whether I have to invest more capital or I need to borrow. That's called capital structure. Fund management, how do you manage the funds? Internal control auditor is the responsibility of management, board of directors, not finance manager. Therefore, answer is option D. The main functions of financial manager include asset management, include capital structure, include fund management. But what is it? Does not include internal control and audit. So for sixth question, answer is D. Very simple. That's all. So we have covered 6 questions. Please note down the question with a relevant answer. The main functions of financial management manager includes the following, except what? Internal control and audit. Who is responsible for internal control? Management. Internal auditor, not finance manager at all. So answer is internal control and audit. For sixth question, option D. That's all. Please copy ma. We'll go to next question. Hope all copied. Copy the question with the relevant answer. That's all. Sixth question. Main functions of finance manager include the following, except you write the answer. Internal control and audit. Option D. That's all. Please copy ma. All copied? Okay. So I'll share the Excel now so that you can take the answers also. Sixth already I have mentioned. So we have got first question, second question, third question, fourth question, fifth question, sixth question. Out of 60, we have covered 6 questions. Easy. How the paper was easy, you see. If you are good in concepts, definitely you can score excellent marks in FM. Okay. All copied? Okay. Good. If you have any doubts, we have covered 6 questions. Any doubts, let me know. Okay. Please have a look for 6 questions. I'll wait for 5 minutes. Please have a look before going to next question. Please have a look. 6 questions. I'll give you 2 minutes time. Okay. We'll go to the next question, ma. Okay. What is the question? Seventh question, start with the problem. We have covered 6 all our theories. Conceptual theories, not simple theory, conceptual theory. Next is 7th question. The present value of 1000 to be received after 1 year. Please, I'm repeating the question, Kana. The present value of 1000 to be received after 1 year. Today my present value is 1000. After 1 year, at the rate of 8% per annum is 926. They are saying today the present value of 1000 to be received after 1 year at 8% per annum is 926. Very simple, ma. Always future. You may say, sir, how the time value of money will get increased only, how it is getting reduced. You should not think in such a way. Future value of present value discounted to the current present value. For example, today is first year. Second year value may go increase. Third year value may increase. Fourth year value may go increase. Fifth year value may go increase. But what we have to calculate, if I invested this year, for this year, what is my estimation for the fifth year also? That's I'm discounting future value to the current discount rate. That is called discounted cash flow. Okay, that is called discounted cash flow. Okay, so the answer will be, so what is the answer given? The present value of 1000 to be received after 1 year at the rate of 8% per annum is 926. If discounted off yearly, what will be the present value? Simple question. Discounted off yearly. That means what? Twice. Correct? 2 times. Off yearly. That means number of times is 2. 8% for 1 year. What will be your off yearly? 4%. Correct? So what will be your answer? Always I will take, you remember when we do discounted future to the current present value, what we will do? 1 divided by 1 plus rate. Same formula will also apply, but off yearly. It will not be 8%. It will be how much percentage? 4% for 2 terms. That means 1 divided by 1 plus interest rate to the power 2. Very simple. I will share you now Excel for you. Please copy the question, then we'll go to the answer. Please copy only the question, don't write the solution. Please copy only the question. I'll give you time. Please copy the question. There are 4 multiple choice question answers. Option A 924.55, option B 930, option C 600.96, option D 934. So how to do this problem? I have told you the steps how to do. Discounted off yearly. It's not 1 year, twice. 2. Off yearly means 8% per annum. It's for 1 year. What will be off yearly? 50%. 8 divided by 2, 4%. 1 divided by 1 plus 0.04 to the whole square. 2 years. That's all. Hope all copied the question. Please copy the question. I will do solution for you. Okay. Now what I will do? Please copy the question. I'll give you time. Please copy the 7th question. Okay. Now we'll do the solution. Okay. 7th question is a problem. It's a problem question. Correct? What is the question given? 1000 rupees they are given, Kana. So term will be, how will you write the term? Very simple. How will you write the term? It's off yearly. What is the yearly interest? First of all, when you make a solution, you should have some facts. What is the yearly interest given? 8%. So off yearly it will be how much interest? 4%. Question is off yearly. How much, Kana? 8 divided by 2. It will be, sorry, you can put 8 divided by 2. It will be 4% for off yearly. What is the year? Off yearly interest we have found out. It is for 1 year. but they are asking for half yearly. That means what? Twice. So n equal to 2 times. Number of times is 2. So we know the formula how to calculate the future to the discounted present value. 1 divided by 1 plus interest rate. Am I correct? 1 plus interest rate is a formula. So we know 1 plus, what is your interest rate? 0.04. The whole power square. To the power 2. To the, I'll put to the power 2. Because it's Excel did not come. So whole square. Now it's very simple, Kana. What is 1 plus 1.04? 1 plus 0.04 is 1.04. Correct? 1 plus 0.04 is 1.04. So twice. So 1.04 into 1.04 power square. I told you twice half yearly. Correct? You got the answer now. Now we know what is interest 1 plus. So 1 divided by 1.0816. So what will be your answer? 1 divided by 1.0816 will be you got. So you have found out what is my future value when I discount to the current present value. Future value is 1000. If I discount to the current year present value, my PV factor will be 1 divided by 1 plus interest rate. Interest rate is half yearly. Per annum is 8% 1 year. Half yearly is 4%. Number of years is 1. Half yearly means what will come 2 times. 1 divided by 1 plus interest rate to the power number of years. Number of years is here twice. Half yearly 2 times. So 1 divided by 1.0816. You got the PV factor. Now what is the answer? Now go to the question. What is the question given? Question is given how much? 1000 rupees received. That means answer is 1000 into 0.924556. So answer will be 1000 into 0.924556. Answer is 924.55. Please copy this question. So what is given? 924.5. Answer is option A. Answer is option A. Please copy the solution, ma. It's a very simple question. Please copy this. It's okay now. Everybody can see now. I have enlarged also. I have extended my screen. Please copy, ma. Okay. Any doubts? Next, we'll go to 8th question. Please copy this. I'll give you time, ma. Don't worry. Please copy. Okay, we'll proceed next question. Hope all copied, ma. I have given time. Okay, next question. It's also a very similar question, Kana. What is the present value of the maturity value of 10,000 which has been given on 15% interest for 5 years? Very simple, ma. Maturity value given, ma. 10,000. They are given 15% interest for 5 years, Kana. So that means today we invested, present maturity I will get with 15% interest. Correct. Also, they have given future value of 15% after 5 years is 2.0. My present value is 10,000. What is my future value after 5 years, Kanna? Very simple. 10,000 into 2.01136. I'll get that what? 15%. But what they are saying, my required rate of return is only 10%. Okay. They are saying I'll get with interest 15% Kanna after 5 years. That means today 10,000. My maturity value with interest if I get means 10,000 into 2.01136, I'll get 20k something. But my future value at 10% after 5 years is 1.610. That means what is the answer you will get? Divide by the future value after 5 years. You'll get the answer, solution. That's all. I'll work out this problem. Please copy this question. First of all, 8th question. Please copy, ma. All copied. Please take a screenshot or copy the question alone. All copied. Okay. We'll go to solution, ma. What is given, Kana, in the question? 10,000. They are given very simple. Maturity value of 10,000 with interest. Maturity value 10,000, Kana, with interest. Interest, how much is the rate? At the rate of 15%. They have given the PV factor also. After 5 years at 15%, what they have given? They have given future value. It's not present value, Kana, future value. Correct? Future value at 10% after 5 years. How much, Kana? It is 2.01136. Then it's very simple. So after 5 years, how much you will receive? 10,000 into how much PV future value factor? 2.011. Correct? It's 2.01136. 1136. That means what will be your answer? 10,000 into 2.01136. We got this mark. Okay. But what they are saying, but required rate of return is only 10%. How can they go for 15%? Very simple. Then given solution 20113.6 is you have taken. What is you have given? What is the future value after 5 years at 10% interest? How much they are saying, Kana? That is also given in the question. 1.61051. That means at required rate of return, what will be your future value after 5 years? So you know you have already arrived 2113.6. They have given what is your future value factor also 1.61051. The answer will be 12,488. You can put in the bracket 20,000 113.6 divide by 1.61051. That's all. So 12,488.96. So the exact solution will be what, Kana? 12,488.96 falls under option A. Answer is option A. Very simple. Please copy this question. Please copy, ma. All copied? Please copy, ma. Please copy. All copied? Okay. Option A, ma. Okay. Next question. What is the next question? Ninth question. What is the question given? Ninth question. M&P Limited. It's considering purchase an asset costing 80,000. What is the investment value costing? 80,000. You want to purchase an asset, it costs 80. Having useful life of 4 years. How much is the useful life? Number of years a machine will fetch? 4 years. During the first years, net incremental after tax cash flow. Cash flow after tax is given. 25,000 for first 2 years. Next 2 years, 20,000. What is the payback period? Capital budgeting, what is the foremost first method? Payback method. Everybody should have understood what is payback. What is payback? How much years I take to recover my capital? Today we invested 20,000. How long it will take to recover my capital or cash outflow? What is the meaning of investment? Other name is cash outflow. How much time it will take to recover my initial amount which I have invested? That is called payback period. In the given question, what is the investment? 80. What is the number of years? 4 years. What is the cash flow for 4 years? That is also given. It is not discounted payback method. Normal payback method. There is no PV factor. There is no cost of capital. Very simple question. Please copy this question or take a screenshot. We'll go to the solution. Copy it. Okay. Hope all copied the question. Please copy, ma. Got to go to the solution. Please copy. Okay. Hope all copied the question mark. So very simple problem, simple payback method. I'll share the Excel now for the solution. Okay. So question number 9. We have covered till 8 question. Question number 9. What is the investment given in the question? What is the investment given? Original investment or cash flow. Or cash outflow. How much it's given? 80,000. What is the number of years? Number of years is 4. What is the cash flow after tax? That is also given. Correct? Then we can make the formula. What is year? What is the cash flow? What is the cumulative cash flow? Because I want to know how much period I take to recover my 80K. 80,000, how long I will take to recover? So I need the cumulative cash flow. So first year, what they have given for the 2 years cash flow? They said very clearly 25,000 for first 2 years, 20,000 for next 2 years. Very simple. First year 25,000. Second year is also 25,000. Third year 20,000. Fourth year 20,000. What is the cumulative cash flow? It's very simple. First year I will get only same. I will invest cash flow. I'm getting it 25. Second year will be cumulative. 25 plus 25 as on year 2. Ending year 2. How much I will get? 50,000. Third year as on ending third year, how much I will get? 50,000 plus third year cash flow 70,000. What is my fourth year? I will get the total cash flow as on YTD, as on year and 4. 70 plus 20, 90. That's all. This is the first step you should do for calculating payback. Now, what is the original investment? 80. I need to recover 80,000. Correct? How long it will take to recover my 80K? That I need to find. If you take first year, I have not recovered. I recovered only 25. Second year, I recovered only 50. Third year, 70. Fourth year ending, I got 90. That means in between third year and fourth year, I have recovered my 80,000. Very simple. As on ending first year, only I got 25. Second year, I received only 50,000. Third year, 70. Fourth year ending, as on year ending 4, I have a cash flow of 90K cumulative. That means in between third year and fourth year, I have recovered my amount. Correct? How to calculate the formula? Very simple. So 70, 3 years, I got only 70 plus. What is the original investment? 80,000. That means further 10,000 I should recover. So bracket you can put, it can be 90,000 minus 80,000. Correct? Because I need only 80. 90 I have received. I should feel happy when I received at least original investment. That is the idea of payback. 90,000 minus 80,000. Divide by fourth year only I can apply my cash flow. Correct? Third year I have received only up to 70. Fourth year, what is my corresponding cash flow? Only 20K. Because in between month, I need to know in the third and fourth year how much months it will take to recover. Because I don't know 3 or 4 months, 3 or 5 months, 3 or 6 months, 3 or 7 months, I don't know. So I have to calculate for month into 12. So that means 3 plus, what will come? 90 minus 80 is 10,000. 10,000 divided by 20,000. Correct? Into 12. Very simple. So 10,000 divided by 20 will be how much, Kanna? It will be 0.5. 0.5 into 12, how much? 6 months. Into 12 months, 6 months. That means 3 years and 6 months. 6 months means how much? Half year. Correct? 1 year consists of 12 months. 6 months consists of 0.5. That means 3.5 years. So what is the option? There are 4 options given in the question. So option is B is the answer. Very simple answer. Please copy, ma. Please copy this. Please copy, ma. So you have covered 9 questions. Please copy. Any doubts, let me know, ma. Very simple problem. Hope all copied. Okay, we'll go to next question. Hope all copied. Okay, please copy ma. Take a screenshot, please. We'll go to next question. What is the question? 10th question. Very simple. All questions are very, very simple. Very, very lucky attempt. Your questions will also be simple only. Don't worry. What is given, ma? 10th question. ABC project as the following cash inflows for 4 years. Cash inflow means what? Profit. Correct? Cash flow after tax. That's called cash inflow. First year, 34,444. Second year, 39,877. Third year, 25,000. Fourth year, 52,800. Initial investment how much? 1,04,000. You have to find out at the end of fourth year what is my present value of annuity of rupee 1. Correct? Very simple formula. Original investment divided by average cash flow. You will receive what is the annuity factor. Please take down the formula. Please copy the question first of all. Then we'll go to the solution. Please copy this question, please. Okay. Hope all copied the question. We'll go to answer. Next is 10th. 10th question. They are given what is the original investment. Original investment given in the question is how much? 1,04,000. And again, what is the cash flow for 4 years? Kana? Year 1, year cash flow. Year 1, how much it is given? Year 1 is 34,444. Year 2, 39,877. Year 3, how much? 25,000. Year 4, how much it is? 52,800. I told you what is the formula for present value of annuity factor under IRR method. Very simple. Original investment. Please copy the formula, ma. Original investment divided by average cash flow. We know what is the original investment, but we don't know what is the average cash flow. Average cash flow is equal to sum of all the 4 years. Divide by 4. That's all. 38,000, 30.25. It's an average. Average of 4 years. Divide by 4. Clear? So, what is the original investment given in the question? 1,04,000. 1,04,000, 10,40,000. What is given? 1,04,000. It's not 10,40,000, 1,04,000. Correct? Divide by what is the average cash flow we have derived? 38,000, 30.25. The answer will be 1,04,000 divided by 38,000, 30.25. So how much factor you are getting? 2.734. This is your PV annuity factor. Now you can go and check at which percentage 2.14 is coming. Please copy this, then we can proceed with the question. Please copy after this. All copied after this. All copied. Okay. Now we'll go to, please copy this. Hope all copied. I'll go to the question now. So we have computed what is the, how much is the annuity factor, Kanna? Correct. What came? It came around how much? How much? 2.734. I have shared the PDF of the answers. If you see in this, correct, there are 4 multiple choice answers. You arrived 2 point how much, Kanna? 2.73436. When you see in this, where it is coming, 2.1436. It can come under where? It cannot go beyond 2.1436. It should be within 2.1436. 16 percentage, 2.7. 7982. At 17 percentage, 2.7432. At 18 percentage, 2.6901. That means IRR should be, what is the answer? Greater than 16 percentage, but less than 18 percentage. That's all. How simple see. Clear? So what is the answer we have derived? 2.7436. It is lying in between 16 to 18. That's all. I cannot go beyond the amount. So answer is IRR is greater than 16 percentage, but less than 18 percentage. Option C is the answer now. So answer is option C. Clear? You have completed 10 questions out of 60. Any doubts, let me know. Okay, option C. Okay. Any doubts? Okay, clear? Okay, we have completed 10 questions. Okay. Next question, ma. Okay. Next is 11th question. What is the 11th question given? Simple question. Expected net present value. What will be my expected NPV? What is my expected profit? They are given some probability. Kanna. The first year, they are saying 30% probability. Assume economy is strong. If it is strong, probability is 30%. If the economy is normal, probability is 40%. The economy is weak, probability is 30%. They have given some amount also. Very simple question, Kanna. Please copy this question. I'll give the answer for you. Please copy. Please copy the question. Okay. Please copy this. All copied. 11th question. Okay. All copied. I assume you are copied, ma. Otherwise, please take the screenshot, ma. Now I will give the solution for you. Next is 11th. Very simple, ma. They have given three options, Kanna. One is strong, other is normal, other is weak. Correct? In the strong case, what is the net present value? That is also they are given. The strong case, economic strong means they have given net present value 8K. At probability how much? 30%. Second situation, if the economy is normal, net present value is 4,000 at 40%. The economy is weak, NPV will be 2,000 at 30%. Very, very simple. Just multiply with the net present value with the probability mark. 8,000 into 30%. Correct. Next is 4,000 into 40%. Next, 2,000 into 30%. Definitely this kind of question will come. So my expected net present value will be 2,400 plus 1,600 plus 600. So expected NPV. That's all. Very simple. 4,600. Answer is option D. That's all. Please copy this. Please copy, ma. So how to calculate? 8,000 into 30% plus 4,000 into 40%